The best of money matters. Under the radar.
You're listening to Money FM 89.3, and it's now time for a special on-the-go episode of Under the Radar with me, Chua Tian Tian, where we bring you on-the-ground reports of key business events, launches, features, or developers' days. Now, energy, trade, technology, and the green transition, the biggest questions in the oil and gas world, converged this week at the 41st Annual Asia Pacific Petroleum Conference, or APPEC, right here in Singapore. Now, hosted by S&P Global Commodity Insights, APPEC features over 200 industry-leading speakers and is set to deliver unparalleled insights into the future of the global energy landscape. And Money FM 89.3 is in the thick of it all, bringing you a series of on-the-go, under-the-radar specials from our on-site booth with key leaders, driving conversation ranging from Southeast Asia's energy transition to the forces shaping oil prices, global shipping, and supply chains. And this time we dive into the teething issues relating to trade, shipping, and the shifting of global supply chains amid ongoing US tariffs and geopolitical uncertainties, as well as what that means for companies and governments. And joining me in this conversation is Rahul Kapoor, Global Head of Shipping Analytics and Research of S&P Global Commodity Insights. Rahul, thanks so much for joining me.
Thank you.
Great to have you. And Rahul, I'd like to start by looking at some of the key events that shaped or defined 2025. Most recently, we saw the end of US President Donald Trump's de minimis tariff exemption for small packages. Beyond that, Trump's broader tariffs on its global trading partners are starting to bite. Not to mention geopolitical tensions in the Middle East. We were all looking at what's happening in the Strait of Hormuz earlier, which a fifth of global oil supply passes through every day. How would you describe the year for the shipping industry as a whole?
Sure. I think you mentioned under the radar, right? So when this President Trump administration was going to come in, we all knew we will have a much tougher tariff regime, right? I think if you look at particularly what has happened since the Liberation Day, the tariffs are changing day-to-day basis, right? So in terms of when the companies, when the buyers, importers, exporters, even I would say the countries are planning their supply chain strategies, they're planning what would happen in terms of production, what would happen in terms of the investments, capex, it's become highly uncertain, right? So that's on the business side of things, and that leads to a lot of volatility in the shipping markets, right? But if we go back and when you talk about the oil and the energy supply chains, we have to go back 2-3 years, right? When the Russia-Ukraine war effectively started. We've seen the energy supply chain map completely redrawn. If you look at particularly Asia, you have a lot of Russian crude oil which is flowing into this part of the world. India and China have emerged as the biggest buyers, whereas if you look at Europe, the traditional buyers are sourcing from elsewhere. Same on the refined product market as well. Newer markets have emerged, and what we've seen is Russian gas oil and the diesel, it's going into Brazil. You're seeing clean products or refined products from this part of the world, what we call east of Suez, going into Europe, right? So over the last 2-3 years, there has been a significant upheaval in the global energy landscape, in the global trade flows, and that is having an impact. So shipping markets have been resilient. The good part is we might have elevated stress in terms of the supply chains, but the trade still continues to grow, right? The trade still continues to flow. So you have oil products which are flowing in, you even have the supply in terms of the container shipping, merchandise good, all of that still flowing in. So shipping markets have proved, or for that matter, the shipping industry have proved resilient, just that the stress levels are a bit elevated because of what we are seeing, particularly on the geopolitics as well as the tariff front.
Okay, and let's talk about revenues, right?
Yeah.
Capital IQ estimates showed that 2025 revenue among 9 publicly traded ocean carriers is expected to reach $138.2 billion US dollars, down from $155.5 billion USD reported for 2024. But the industry is still on track for a profitable year in line with what you mentioned earlier as well.
Yeah.
So what are the key drivers bolstering the numbers? How far is the expected performance driven by higher freight costs because of the supply chain disruptions versus from fundamentals like economic growth?
I think and this is particularly about the container shipping industry, the big liner companies, many of them in this part of the world, they've had very significant, I would say, they've had very good years over the last few years since COVID began, right? After the COVID settled in, right, or rather after the COVID passed, we did see container shipping industry particularly coming back up with the supply. The demand was very strong, right? So they did make good money over the last few years. But since last year, we've started seeing oversupply in the industry. A bit of what has helped the container shipping industry is what happened particularly with the Suez Canal and the Red Sea.
Yeah.
That has led to a diversion of almost 80% of trade flow which used to pass through Suez Canal and the Red Sea, and that has tightened the supply artificially, right? So whereas your demand was growing. This year what we are seeing is there is enough supply coming in because there are more container shipping capacity being added, despite the Red Sea and the Suez Canal diversion still in play. But the demand has started to soften. In the early part of the year, we did see a lot of what we call front running. So because of these tariffs coming in, the exporters as well as importers on the US side particularly were trying to get the goods in early so they could avoid paying that penalty or for that matter the higher tariffs. But we've started seeing some of that normalizing, in particular in terms of trade as well as the goods settling in, right? So the demand is softer as well as the freight rates have come off. Freight rates now, after all the tariff-driven surge, have effectively come off and they've settled to the lowest point in the year, right? So you would continue to see profitability being eroded on the container shipping side. So not a surprise that the revenue as well as profitability is expected to be lower this year, and we are looking at a oversupply situation next year as well. So it could be, I would say, a challenging time for the container shipping industry over the next few years.
You talked about normalization. So as governments around the world navigate teething issues relating to trade and geopolitical uncertainties, as they seek a sense of normalcy, many are rethinking their supply chain and logistics network resiliency and adapting to capacity shifts. So how would governments then balance the conflicting demands of economic growth as well as resilience?
I think it's going to be a very tough task for the governments, right? We are in a very difficult environment. When we say that is over the last 20 years since China joined WTO, we've seen a globalization which has taken a pretty good course over the last 20 years. I think now we're looking at everybody, for that matter, particularly the US turning inwards. We have higher protectionism, you have these tariffs, and if you look at the numbers, 2024, the US tariffs are around 2.3, 2.5%, and we're talking about 16 to 20%, whichever numbers you look at, right? That's almost 5 to 10 time increase, right? Very significant tariffs which have come onto the companies, onto the consumers as well. So you would expect the governments will face challenging times, specifically is what's happening with the tariff and the geopolitical landscape, and specifically for the nearshoring, and we heard a lot about supply chain diversification. I think that is important. That's already started, I would say, back in the first term of President Trump. I think we realized that the COVID time, everything was very much dependent on the Chinese export machine as well as North Asia. So we saw a bit of diversification from there as well. And now we'll see a lot more supply chain diversification certainly accelerate over the next few years. But we also have to understand that China is still the factory of the world. China remains the biggest supplier to the Western economies, Europe, US, and so on. But we're also seeing Chinese trade, which is rising, particularly with the ASEAN countries, right? So I think what we are seeing here is a role of intermediaries. So Chinese goods coming into ASEAN, and then we see a certain value add as well as other things which happen to these products and then being sent to Europe and US particularly as made in these countries' product, right? So we'll continue to see a lot of that as well. But if you look at the next 5 to 10 years, you'll see a bit of diversification away from China, and ASEAN countries do tend to gain. I think we've seen, if you've seen the case of Vietnam, we've seen in case of Malaysia, Philippines and others. So there is a great opportunity for ASEAN and for that matter, Singapore, right, to take a bit of that reshoring away from China. But at the center of it, China will still remain one of the key component in terms of the global manufacturing powerhouse it is.
And finally, before I let you go, Rahul, what are some key learning points for players within the shipping industry? How far can ASEAN, as you mentioned, benefit from strategic reshoring efforts?
Yeah, I think ASEAN would benefit, and the fact is everybody has to, what we call, has to shore up this supply chain resilience, right? I think your efficiencies at the ports, the efficiencies of your intermodal, efficiencies of your logistics industry, all of that have to come in play for you to take benefit of that supply chain diversification which is coming, or rather which has already started but is going to accelerate, right? So I think governments have to play a major role, the industry has to play a major role working in collaboration with the governments as well as their trading partners, because the train has moved. right? We are going to see that diversification away, but I think it's important to understand that it's not a short-term story. It's a much longer 5 to 10 year story which we're talking about here.
Lots to watch indeed. Thanks so much for the insights
so much for
today,
having me.
Rahul. Thank you. That was Rahul Kapoor, Global Head of Shipping Analytics and Research of S&P Global Commodity Insights, joining us. And that was an on-the-go special of Under the Radar with me, Chua Tian Tian, signing off from APPEC by S&P Global Commodity Insights, held at Raffles City Convention Center this week.
Before acting on the information on Money FM, please consider if it's suitable for your own investment objectives, financial situation, and risk tolerance. To listen to more great interviews, download our podcasts at audio.sg or download the audio app. That's AWEDIO, audio at the App Store and Google Play.